This is a trade that I'm quite a big fan of, particularly in terms of how the market's currently moving. So at the moment, if you get up a daily chart, and I'll show you this on top trades in a minute, Eurostoxx is much stronger than the DAX. Now the idea of a DAX stocks divergence trade is the DAX making new lows when the Eurostoxx isn't. What this gives you is additional strength in levels to the downside. So if you've got a level to the downside that you like in the DAX, if it's breaking down without the Eurostoxx, then it gives you more reasons to try and play that level, because the Eurostoxx is not sort of supporting, perhaps that's the wrong word, but not supplementing the DAX move lower. And so by Eurostoxx staying high, it's always sort of a drag on the DAX and just keeping, sort of trying to pull it up. We saw it once in the morning where we got the first move down to 74s in the DAX as the Eurostoxx failed to then break out of the morning range. So that was just down here. Then once more down towards 57s. This was a key area from a few days ago, 57s to 53s. So that was a level again that you could be looking for. DAX now on this move down to 57s is breaking the lows once more. Is Eurostoxx breaking the lows? No, it's still sitting within the range that it's established all morning. That's the kind of thing that you're looking for. And DAX makes new lows. Eurostoxx is not at its low, and certainly not breaking lows on the day again. After the DAX has already put in lows, broken them once, and then gone again, these levels then offer you a chance to have a go at a buy for another move higher. As it's happened, the DAX has then continued to have one more low, and then this move has retraced almost the entirety of the whole move down. So let's go and have a look at what clues you get from a ladder on this, because you can see the setup, and it's a case then of recognizing the setup and looking at the level thinking, right, I do want that level. Is the market giving me a chance to take that trade on? So I'll just bring the ladders up for you. Right, so here we go. So what we've got, the DAX has already made a new low. The DAX, when the DAX made a low at 74, the Eurostoxx made this low at 98. So we're now 15 ticks lower in the DAX and still no lower in the Eurostoxx. That's the first sign. So now you're looking at this thinking, right, I've got a level between sort of 57s and 53s. So that's the area that you want to have a go at buying this in. And as long as on a move down in the DAX, the Eurostoxx doesn't start breaking its low, this level is still quite a valid area to be looking to have a go at buying. So very slow activity early on, or in the early part of this trade, not a great deal going on. Here, a little dip down in the DAX, quick flash through the low. You can see no movement at all in the Eurostoxx, 50 lot trades. This is now key. We're putting volume in below this little area of low volume. If the DAX jumps back above there, it's not necessarily a case that you have to try and buy 57s, and that was the only trade you could have had in trying to buy that range. But if we skip back through 60s, that then gives you the point to take the trade on. You don't have to buy it passively and sit waiting in this zone, but there we go, quickly above 60. This now can give you a passive entry to try and buy 60s. You're using the information that you got. Eurostoxx has bid up since then, so when the DAX went through the low, Eurostoxx, nothing traded down. As soon as the DAX started to pull back, Eurostoxx was then bid. That then gave you the further clue to the upside. The DAX then spends quite a long time, and when I say quite a long time, we spent about half an hour sitting very sideways between 66 and 60s. That gives you a chance to accumulate a position with the information that we've had that breakdown to the level without any movement in the Eurostoxx, and this is that divergence trade that I'm talking about. You saw the little panic in the DAX there, and it was just a very quick flush, people getting out of a little long position, quick squeeze down, no willingness to keep the move going, particularly as the Eurostoxx is not coming off. And so that's then your little clue. That's the clue that says, right, now we could have a chance at buying this. And you then get the access point as well. Rather than necessarily having to buy down at the level, once it skips back through that low volume, so puts a bit of volume lower down, skips back through the low volume at 60, you've now got back to that previous support. So essentially you have a level that establishes at 60, dips through, comes back, establishes again, and then moves on higher. And so that then becomes your buy area. You don't necessarily have to buy it on that first dip down, but it's the information you get on that flick down and quick ability to move back above while stock stays up that gives you that trade.